Welcome back to our another episode of our podcast, in Coins Capture. And today we have with us Yat Siu from co-founder and managing director as well on Animoca brands. And today we'll talk about a lot of things, especially around latest things happening around the crypto world, the disruptions happening, the speculations which are shifting around, the narratives which are shifting around with the government sides, and what's new coming up with the AI side, which is weaving into the crypto as well. So we will talk about all these things in a short. So no other person can answer all these questions other than Yat Siu, because he sits the front row of top crypto voices since very long time, and getting some insights from him is the best you as a viewer could ever get around. So we'll start straightforward because we're tight on schedule as well. All right. I have a few questions which we planned out regarding the latest things which are happening around it. So the first one is, so we are clearly in another phase of market disruption, volatility, and things happening around, and capital rotation and a lot of noise. From your perspective, is this disruption actually healthy, or it's going to affect the Web3 in the long term?
Well, I think capital rotation is normal, but first of all, I don't have the crystal ball, just to be clear here, right? So it's not like I can, we've had some good bets and we've done well, but broadly speaking, the markets are the markets, right? And, predicting markets is predicting human behavior, which I think, even the best people in the world have difficulties predicting. But maybe let's comment about the market a little bit. So I think it's worthwhile going back in time, right? And when you think about what's happening in the space right now, it's very clear that there is capital rotation going out of crypto. When you think also where has most of the rotation into our sector been, it's been institutions. Really since, you could say 24, starting with the ETFs, and of course 25 with Trump and everything, there's been a large wave of institutional capital adoption, starting with ETFs, then of course the DATs, which have sort of had mixed results, and then of course, with RWAs, which is a very big topic, and of course stablecoins and so on. All of these have really sort of hit the narrative. But who are the buyers of these assets? Typically institutions. When you think of the previous period, most of the buyers of these assets were retail. Basically, they're people from all over the world, many of them who hadn't really sort of looked at even investing, right? And that's why I think it's useful to go back to the era of 21, 22, which was actually the NFT boom, right?
Correct.
And
Correct.
By the way, NFTs today still trade $300 million a month. Okay,
Correct.
So it's not a dead market, but it's obviously not as hyped as it was before. But what was interesting is that in 21, 22, because of NFTs, because of the Metaverse and gaming, we had millions and millions of new users into crypto for the very first time. These millions of users have stayed with the crypto period of 23 and 24, right? And these users, many of them have started to rotate out in 25. Now, why did they rotate out? Part of it is because of different asset classes. And so this is a theory, but our theory is that what happens when you enter into crypto and you're not financially literate, you learn about money, right? How did you get into crypto?
I loved Bitcoin in the very beginning. So I was a developer. So
You're a developer. You don't have a finance background.
Yeah, I didn't have finance
Exactly.
background.
You don't have finance background. So your friends who went to Wall Street or who went to bankers, and you're a developer, you were actually living two separate worlds.
Correct.
Right?
Correct.
And you probably weren't thinking about a stock portfolio.
Nope,
Yeah,
nothing.
Exactly.
Nothing.
You're 99% of the world, by the way, right?
Correct.
Like most of the people in the world do not think, oh, I'm coming out of college, what's my stock portfolio? No, what assets should I buy? You're thinking about your job, right? You're thinking, I should be a developer, I should be a doctor, I should be whatever. Only the people who go to Wall Street initially, or like a bank, think, how should I invest? Because that's their training, which is very normal, right? But when you start buying crypto, you start learning about money because it's volatile, because there's trading, right? And think also about how our children learn about money, Pokemon cards or things that they trade.
Right.
So the exchange of value of some sort teaches you about that. Okay. So now what's happened is that group of people were exclusively trading crypto for a while because they entered the world of crypto, right? And then, however, they started learning about investing because they started to become more financially literate. They go, oh, okay, I can buy crypto, this meme coin, I don't know its value, but then I have an idea. Oh, Bitcoin, store of value, what does it mean? Oh, inflation, what does this mean, right? Oh, basically QE, what does this mean, right? So today, the group of people that have entered crypto in 21, 22 with the NFT boom which really brought in, I would say, the largest amount of new users into the
Retail
space,
users.
right, from retail that have sort of stayed on. They're now saying, okay, how can I diversify my portfolio? Right? They've matured, they've grown up. And so, in a way, that audience has now started buying gold, okay, right? And started buying other assets. And I'm not saying it's a bad thing, because I think part of the mission in crypto, in terms of growing financial literacy, is to become more financially aware and more savvy. So it makes sense to diversify your portfolio. However, the issue is that while institutions have gone in, retail has actually gone out a little bit, okay? And so we haven't had a big new influx of new users entering the space. Now, how have new users entered the crypto behind the scenes? So what was the biggest story last year? It was prediction markets. Polymarket is a great example,
another
right?
thing, yeah.
So how many people who use Polymarket actually know that it's running crypto? I think nobody knows, or very few people really care that the Polygon blockchain is running on the back, right?
Correct.
And which is also interesting because the Polygon blockchain is worth, maybe $1 billion or $2 billion, right? But Polymarket is worth $8 billion, right? Which is, by the way, how we think value capture will hold generally between L1, L2s, and applications are the same on top. But the issue is that because the capital is invested in a manner where they don't understand or care about the on-chain dynamics, they're just investing, they're only spending it in Polymarket. They're not taking the money from Polymarket and saying, oh, maybe I can put it on DeFi. Oh, maybe there's a yield product I can invest in, and extending from there. They're only using it in that particular area for the time being, right? For the new users, because they don't know, right? They're treating it like your typical sort of closed prediction market. They're not knowing that the asset, once it's on chain, can travel around. And I'm not sure that Polymarket wants them to know that either, because it's not necessarily good for them, right? But remember, when you have an NFT, yes, most of the trading happened on OpenSea back then. However, the asset was now sitting something where you would get an airdrop that you would then receive in your wallet that you could then maybe trade in, I don't know, Jupiter, or in Uniswap or some other kind of DEX, and then eventually maybe in a centralized exchange. So I think the market currently with this is going through this rotation. The people who are in crypto haven't left crypto, but they've just basically diversified their assets. And of course, unfortunately, 25 has been a bad year for crypto despite Trump, which means also the net asset value of token holders is also poor. So they're not spending as much as before, right? So you have a mixture of these things. So I think the way to solve this is, one, we need, of course, the institutions to keep buying. That's what's happening right now. But the second thing is you need more retail to enter the space. And so we need to give them the use cases. We need to tell them why you should be using crypto. Like my mom's not buying crypto. She's not in the space because it's hard for her. She doesn't understand it, right? So we need to keep building the solutions that can help do that.
Yeah, okay, that's a good insight. But I always had this one thing in my mind about the institutes entering into the crypto space on a larger scale. I mean, we've seen institutes enter, but not at the scale which we are seeing right now in past 2 to 3 years. So what do you think that will affect the retail investor in the long term, or that will help the retail investor in long term?
So my general message I have for crypto is don't expect the institutions to save you. Okay. I mean, if you think about the history of how crypto started, it was very much, and I wouldn't say anti-institution is the right way. We need institutional support, but you don't want the institutions to own it either. Right? You need to have that balance where you have the institutions and the retail. That's the whole promise about sort of democratized finance. Right? I mean, if institutions own, theoretically, again, I don't think it's going to happen, but owns like 90% of the sort of crypto market and the assets, then it no longer is the asset class of the mass. It's the asset class of the institutions, right? Which is basically Wall Street, right? So in many ways, I would say that's not really what we're trying to do here, right? And so the thing is also, though, that institution looks at crypto as an asset class. It doesn't have an attachment to its values necessarily. Some do, but most don't. It's like, okay, there's value. I'm going to invest. I have a return. My shareholders want return. That's what I'll do, right? So if crypto is volatile, maybe they'll trade the volatility. Maybe they'll hedge it. Maybe they go long, short, all that kind of stuff. They don't really do it because they think that Bitcoin is going to go to $1 million. They're doing it because they need to make 10%, 20%, 5%, whatever kind of yield they're generating, right? And that's different from people who are saying, hey, this is my belief in decentralization, my belief in a world where we should all have ownership in what we're doing, my belief in a better internet where value can be better shared. That's why you hold that asset.
Correct.
Right? And so you need both. You need the institution to enter, but you need the retail to understand and to appreciate that owning this asset class is a way in which you basically can have a stake in the future. And I think, when the asset is very, very volatile, it's difficult for some people, especially when they're leverage trading.
Right.
And I think this is one of the big differences from, again, 21, 22 versus now, is that perp markets are the dominant instrument of trading. And price discovery, at least last year, was often led by perps, not by spot. When you have a market crash, and especially what happened in October 10, at the end of the day, with a crash like this, you have nothing, because you've basically lost, basically the up and the down, right, as it were. However, if you have spot, then if the market price drops, at least you own the tokens, right?
Correct.
And if the token at least recovers or sits somewhere, you still have something to build your base off from. But on perps, where you got liquidated, both on the long and the short, you have lost everything.
Yeah, you lost everything.
And so that's kind of where the market is recovering from. And the size of that damage is greater than FTX and Terra Luna, right? So that is the positive and the negative. The negative is, of course, it's bigger, so the damage is large. The positive is Bitcoin's still 70,000 after all of this, right?
True.
Whereas, back when FTX happened, Bitcoin sank all the way down to, I think, like 15 or 16, or something really
Correct,
terrible,
it went
right?
down, right?
Yeah, exactly, went down a lot. So again, I would say the institutions and certain holders are keeping it there. However, it remains volatile until there's more strength in the market. And again, I go back to this point, which is that, when the meme coin cycle happened, basically before Trump got elected, really, it was the same people in crypto retail trading with each other. We didn't really have new audiences enter the space to understand it better, right? And this is the problem that we need to continue to solve.
Perfect. I think that was a well described solution for what I was thinking about. Okay, let's move on to the next question. So regulations are usually framed as a threat in crypto. But lately it feels like a regulatory clarity which may actually unlock adoption. So do you see regulation today as a break or a growth?
It's growth, absolutely. But there's compromises on the growth. In the same way that when institutions are entering the space, then you have to compromise with the expectation of what the institution has and the expectation of the people who entered crypto in the first place. What I mean by that is we go back to mass adoption, right? So all of us here, and probably much of the audience, you guys are all early adopters or innovators, right? You're in the first 5 or 10 percentile of the world. You probably try new software, you tinker around, there's a new crazy thing, you'll do it. You probably install OpenClaw, right? Like you're willing to do sort of the crazy new stuff that 90% of the world will not do, right? And that's the audience of crypto. So how do you expand that beyond that? It's basically going for the people who want the stuff that is more common, more safe. And so you need regulation. So I go back to the example of my mom. My mom's not going to be entering crypto unless the government says it's safe, or at least or there's a regulation around it. And her friends say, "Oh, I bought crypto too, right? I think it's safe, or it's a good investment class, or let's put 1 or 2%, or something like that." That at least from their perspective, they go, "Okay, this is now legit. This is validated." But remember, it's only been a year and a half where crypto people in America were treated like criminals,
Correct.
right? So it's only a short period of time. So even as regulation improves, there is this element where people still have to be adjusted to the fact that it's okay. Unfortunately, also the media and the politics make this part hard, because there's all this controversy around Trump and Trump family, right? And with the whole Clarity Act, where they're trying to sort of push basically the ethics clause, even though it probably shouldn't be there just because it's not really a place that should be there for legislation per se, the fact that it's being debated continues to highlight this issue where people say, oh, crypto and ethics, yes, there's a problem. Even though they're not the same thing in this conversation, it just mars the whole picture. And so still people are sort of sitting back and going, okay. But, if a government says this is regulated, this exchange is good, or this company is fine, or they have a license, or that whatever it is, right? Then you can build confidence that at least there is a safety net, that the government has reviewed it, that there's appropriate sort of measures taken in place, right? And this is all necessary in order to enable mass adoption, especially because these assets have financial value.
Perfect. That makes sense as well. All right. So for founders who are building globally, how should they think about designing a product that can survive across market regulatory changes which comes across?
Well, I mean, I think the most important thing is that if you build a product that people want, That's essentially the mechanism in which you ensure that whether it's regulation, whether it's government, whether it's whatever, will basically want to find a solution because it's something that solves it in a good way. I mean, Uber is a good example. Uber did not have regulatory approval to go and basically launch a service that essentially disrupted the taxi medallion business. Everyone who basically was a taxi medallion owner was like, this is bad, we don't like it. Some governments were obviously also upset because it was, because of taxis, because of jobs, all that kind of stuff. However, Uber provided a valuable service to the users. Not for, for most parts of the world where they were getting bad service or no service, okay? There was a service available. And because the consumer loved it and needed it, in the end, the government had to find a way to solve it because it improved transportation, it solved tourism issues as well in terms of from point A to point B. Like the benefits of having an Uber or Grab or whatever are very, very clear, right? But of course, it was disruptive, but it was a necessary disruption because the ones who had this monopoly on the transport side basically didn't have a need to make that change. And crypto is the same, right? I mean, stablecoins is a good example of an innovation that solves a lot of problems in terms of remittance. Who wants to pay high remittance fees? Who wants to basically sort of wait till 5 or 10 days for the wire transfer to be approved because some bank person says, oh, can you fill out 50 forms? And, the money is stuck in the ether. When in reality, basically you should be receiving it instantly and basically get the benefits of that right away, right? And so again, that pushed that, created this sort of necessary innovation that basically forced everyone to accept it. Right? And the same is for Bitcoin, for instance. I mean, if you look at Bitcoin, now it's considered something that has value. Volatility aside, I think there's almost nobody out there except the ones who hate it since the beginning, right? Who basically look at Bitcoin and say, this asset will not be around. I think a lot of people now acknowledge that this is an asset that has staying power and is important, right? But again, did they seek permission? No. But they did solve a problem that was very important to them at the time. And that, by the way, is the reason why we're also very focused on AI, right? So when we launched just a week plus ago, it's called Animoca Minds. What was the problem that we're trying to solve there? It's an example of that, where basically, instead of having a user open a MetaMask, which is a good service, but again, my mom's not going to use MetaMask. It's just 12 or 24 seed phrase. I have to remember that. I have to write it down somewhere. And again, it's not because it's hard. It's because it's unfamiliar. Right? It's just something you're not used to, right? Remember how hard it was for some people to move from BlackBerry to smartphone? True. It wasn't. Was it hard? It's not really hard. It's just unfamiliar. Like, where's my keyboard, right? What I need. But then the apps were just so much better, and the interface was so much more obvious because you're using your finger that you adjusted to, and you had a bigger screen. And next thing you know, basically you were able to basically just move very quickly. And I think AI has a little bit of that moment as well, where, when using ChatGPT, you get just better results in search. But now with agentic AI, you have the ability for the AI to speak to you in your language and do actions. So I can now use my AI agent, in the case of the Animoca Minds product, to basically, open a wallet. I can give it a little bit of cash. It can buy my NFTs. It can trade them if it wants to. It can also handle my schedule. It can do everything. And if you think about the interface, I think 99% of the world is going to be happy to talk to someone or something, right? That will then do the action for you rather than click, approve, confirm, all these strings, basically, is it safe? I don't know if I'm clicking on a scam site, right? Whereas the AI should be able to do that, going forward, right? And again, this is not to say that you shouldn't move your assets eventually to a cold wallet or keep it somewhere safe. But just entering the space, right? It's like a hot wallet, but just entering the space, what should be the interface? And the interface should really be a chat dialogue, because you can talk to it over email, over WhatsApp, over Telegram, as well, for example, right? So it's kind of part of that as well, right? Which is, again, you're building a product, and if people love the product, then you basically get that adoption. Clearly, there's going to be regulation around AI and money.
Correct.
There's no question. Who's working on it? Not happening right now, right? However, if you're not, if you don't do it, then, and if you want to wait for the regulators to sort of create regulation and then do it, then the issue is that other countries and other places around the world will have done it already. And we're not the only ones doing this. There's like thousands of companies out there who are basically thinking about how to solve essentially AI in finance.
Yeah, because we talked about the Animoca Minds as well, right? But I always had this something in my mind where I always feel that the UI UX of the entire journey of onboarding the Web2 or any users should be smooth. So a lot of people have tried, a lot of founders have tried to solve these things, and they have tried essentially social loggings and other things as well on the process. So what does Animoca Minds exactly do with respect, I mean, which is different from these types of onboarding things?
Yeah, so what Animoca Minds is, it's more like a personal assistant. So the wallet is not the main feature. It's just the fact that it can do it. Is it's actually an add-on is very valuable. It's kind of like if you're a PA and I can handle some of your money, that's very helpful. But our conjecture on this is that the vast majority of the world, and I go back to my mom, doesn't do things because of money. Okay. So, I think in crypto particularly, we're kind of like digital Wall Street in the good and the bad way. Okay. Right? It's a mixture of digital Wall Street and digital Las Vegas, right? They're kind of all kind of put together. What do the two things have in common? Money. What do they care about mostly? Money. But most of the world doesn't care about money in the same way, right? For that crowd, and again, I don't want to put everyone in there because not everyone's like that. Like we don't think about it this way. But for the vast majority, money is the end. You do it for money's sake. But for the majority of the world, money is a means to an end. I have money to have a good life. I have money so I can pay for my wedding, or to have children, or to send my kids to college, to take care of my parents, to have recognition in my status in my family, to own a house so I can live nicely. That's what most of us want. Most of us don't want to be billionaires. It'd be nice, but they don't, right? And they don't care to make more money for money's sake, right? And that's where I think we've gone wrong with the narrative from crypto when we say crypto is just for finance. Well, if crypto is just for finance, then we will only ever adopt a small percentage of the world, right? Think about, we've had the internet. However, with the internet, we now have, when did online trading happen with E-Trade? 1997, 98?
Yeah,
How many decades have we had online trading? 30 plus? How many people are trading stocks? Not as many people who are on the internet.
Less than what we think.
Yeah, but it's like when you think about the global population, it's still less than 10%.
Negligible.
It's negligible. I mean, how many users eToro have? Hundreds of millions of users. Nice. How many people are playing games? 3.6 billion. How many people are using Instagram? I mean, so if we want to bring this technology, which has the underlying technology for ownership and for stakeholdership and for a way in which we can really sort of share value more broadly, right? And to enhance creator economies, right? Then we need to speak in a language that is not just all about, here's just about the money. Like, all the people who make music on Spotify or who listen to music, they're doing it because they love it.
True.
Right? But they're just not making enough money on it. But if they made reasonable amount of money, that's good enough, right? And I think blockchain and crypto can solve that. And I think those are the products that we should be looking at, right? So I think that's kind of the direction that when I talk about sort of the approach, when we talk about things like Animoca Minds, we're not trying to approach it from, here's your digital wallet, right? And here you can make some money. You can make yield in 10,000 ways, right? I would argue you can probably make yield better if you know how to do it. The reason you use Animoca Minds is because it enhances your life, because it can give me an assistant I don't have before. It can handle my calendar schedules. It can, like I use it to basically manage schedules of my kids because they're all over the world, right? Because some of them are studying in the US, some of them are in Hong Kong, whatever, that kind of stuff, right? And then together with my wife, how do we put it all together? I have an assistant that can handle the family schedules and put that together quite nicely. It costs me a fraction of a cost of a real assistant. It can essentially plug into APIs and make travel bookings. And it happens to have a wallet as well, right? Okay. And if someone wants to buy some Bitcoin or some crypto, it can do that too. And if it happens to sit on some money that can spend, and then also in the meantime, while that money is not being spent, put it into some kind of pool like Aave in the meantime to create some yield until you spend it, good. I don't need to send the money to a bank account that then takes a few days to send out again, right? I basically can do everything within the system. And so the person doesn't even have to think, am I moving my money to my bank account so I can do some yield? The AI agent will take care of it all for you. And it's just part of the service. Right? And I think that's the way in which we bring people into crypto.
So it's more of your financial personal assistant.
It's personal assistant with the ability for finance, not the financial assistant.
Okay.
Yeah, the financial assistant, I think a lot of people are trying to solve with AI and finance, which is fine. It makes sense. But again, it solves the problem of a specific person who basically is looking to make more money. And we're not at a point where our financial literacy broadly is high enough that most people know that. Like, most people do not know money at all.
True.
Right? They don't even, we don't teach it at school, right? I think there's a statistic that showed that 9 out of 10 students, once they graduate in America, feel unprepared for finance. Yeah. And that kind of makes sense, because just because you go to university, they're not studying economics. And even if you're studying economics, you're studying macro and microeconomics. You're not studying anything around the stock market,
or the financial market,
or what's happening. And economics is a social science. So whatever they teach you is probably not super relevant to what's happening right now in the market. I liken economic studies right now, from what I've seen, very similar to studying computer science. It's like you can study computer science, you get some fundamentals, but you're not equipped for work because you're not vibe coding, right? Or you don't understand smart contracts, right? You still have to learn that outside, right? And I think it's similar to economics in that manner as well.
Perfect. That makes sense as well. So we talked about stablecoins in between. So there is a lot of misconception, and people, some of them still ask us, like, who are backing these stablecoins? Like, for example, USDT still has some backing, and they're right now buying golds as well. With their latest news. So there are lots of stablecoins which are coming into the market that are flooding the market like anything. So how do you pick the stablecoin which is actually having a backing or a value? So is there any metrics for users to understand?
So I would say that, again, the regulated stablecoins are likely going to be the winners, just because of the fact that the government and the banks and so on will adopt and use them. And frankly, I think banks will issue stablecoins of their own, which means that if I'm a customer and Citibank or JP Morgan or Goldman Sachs has a stablecoin, I can trust that because I understand it, right? Now, I think Tether has established itself as a digitally native stablecoin. So if you're a crypto guy, Tether is it, right? There's Circle too, but Tether is something that you understand. I think it's established itself very well. The question around what backs the asset is always the controversial part, because if it's a regulated stablecoin, it typically can only be cash or a certain kind of treasury bonds, or what's considered high liquidity, essentially, according to the regulation. In the case of Tether, it's a little bit different, but Tether is over-collateralized, right? So in that sense, essentially, the other assets don't represent the majority of it. They represent essentially a portion of it, right? And that's because they're kind of digitally native. And of course, a lot of the gold that they're buying, and just, we talked earlier about what's happening with people who are diversifying their assets. It's a small number relative to the gold market, but Tether basically launched a gold product, right? And with XAUT, basically you now have a crypto investor who now can swap out from their Tether into buying gold. And for them, it makes sense. And again, it's a diversified asset class. And sort of the idea of buying essentially digital gold, as it were, isn't new. It's not new at all. It's been around for a while. You've had other versions of this. But it's because of this growth of the market and the growth of financial literacy that there's a need for a diversified product. And that same group of investors are now saying, oh, okay, I've got some money in Bitcoin. I have some assets. I'm kind of done with meme coins. I want to buy something that has value, that I understand that actually has underlying value of some sort, at least, from a market standpoint. And so that's also why RWAs is going to be very important, because you can buy yield-generating products that essentially are backed by larger institutions, or you can buy royalty products of some sort, right? And that's why tokenized securities are also becoming a thing as well, because I want to be able to buy Tesla or maybe even SpaceX or anything like that, because it's a way to give me exposure. And tokenizing that gives me exposure to this in a way that I can have the sense of self-custody. Even, of course, it's an RWA and there's an oracle involved of some sort. But those are things that really sort of diversify the portfolio.
Perfect. Thank you for answering that, because I think that now solves most of their answers as well. So I don't have to repeat anyone.
Sure.
Okay. So the next one is, so do you believe in public blockchains will remain the settlement layer for institutions, or will we see a split between permissioned and public blockchain systems?
So I think the public settlement layer globally will ultimately, we believe, be public blockchains. And that's because you need a neutral arbiter, right? Otherwise, you have to have cross agreements with everyone. Like if everyone's running on sort of permissioned private blockchains, then you need to create new sort of transaction agreements, even if it's done real time in smart contracts. basically across multiple chains. And that's kind of complicated, right? Also, you then have risk on the asset as well if you deal with permissioned assets. That doesn't mean, though, that domestic markets won't have permissioned blockchains, because blockchains as financial infrastructure do have certain sovereign risks, right?
Mm-hmm.
So if you're America, which is, or like most of the Western world, where it's a free market, then it's okay, because the market's already generally broadly free in construct, right? But if you're in other territories, which is why it's a little controversial in places, even like India, for instance, right, where you don't have free flow of money, right? Then those areas, having a sort of public blockchain within India might be a little bit more difficult for the government to accept in this construct. But so within India, you might use a permission system. But then when you essentially offshore your assets, then it's a public blockchain, because the settlement layer between India and Hong Kong is not going to be done through permission structure. It's going to have to be through a public infrastructure that I can trust. And this comes to the next point, which is around an agentic future, right? So we believe very much that sort of the next stage of the web is entirely agentic. So we just like to describe it as the agentic web, right? I'm not sure if you can call it Web 4, but essentially it's the agentic web. And when agents trade with each other, like I think most audience members that are watching your program probably would agree that they're going to have at least one agent in their life. More likely 3, 4, 5, 6, 7, 8, 9, maybe 20 agents. They all have a wallet, because they're going to buy certain things just for transactions, maybe even just groceries. It doesn't really matter, right? So they're not going to buy from a platform, which is what we do today. They're going to buy from another agent.
Correct.
Right? And even if the platform facilitates the trade, the agent receives the money directly, right? Which is basically what we see with DeFi. Effectively, right? The protocol, I mean, you have joint pools, but the protocol facilitates the trust, if you will, but the asset itself is sovereign. You understand its nature. So if I give you Bitcoin, you know it's real Bitcoin. You don't need to wonder if this is funny money, or if it's a stablecoin. It's a stablecoin that's Tether or Circle or whichever. You can trust that, because the smart contract validates that, okay, this is real dollars, or whatever token that is, there's a value attached to it. So the agent can trade with each other. They're not going to do this on permission blockchain. It has to be on public infrastructure. So if you imagine that you're going to have at least 1, 2, or 3, or 10 agents doing that, not 24/7, or maybe 24/7. Some do it all the time. Some do it just once a day. Transaction. You're going to have an on-chain world that's exploding with activity, trading and doing transactions, buying stuff from each other. They're very individualized. At scale, and that has to be done on public blockchains.
Perfect. That answers the question of that. You emphasized or that financial literacy will be the king. So why do you believe financial literacy is becoming more important in a tokenized world, or not less?
Well, so right now, I think the importance of financial literacy, I think, has a global is a global perspective, and is global importance. Because we think, just to dial back a bit, that in order to solve global inequity, which is the problem we have in the world today, between, let's call it the ones who have a lot, which is the 1 percentile, and the ones who have little, which is the rest of the world, right? I mean, I think something like 60 to 70%, or some crazy number like that, of the wealth transfer during COVID went to the 1 percentile.
Correct.
The majority essentially received a small amount, distributed amongst essentially billions. And that has to do with the fact that the 1 percentile has financial literacy. They knew what assets to buy. They knew how to hedge themselves. They knew basically sort of, where to invest and where to manage. And we generally agree that we live in a capitalist world, yet only a small number of the world are really capitalists. Because essentially, to be a capitalist, you need to be financially literate.
Okay.
So that's the friction. And so if you're not financially literate, then what are a lot of the young people who can't afford a house, especially in the West, and I'm not sure about India, but elsewhere, are saying? It's like, I don't like capitalism. Capitalists are bad. Billionaires should not be allowed. Of course, if it doesn't work for them, then why should they vote for it? Why should they support it, right? So the solution is to bring them in. But how do you bring them in? They have to learn about money. How do you learn about money? And this is where we think tokenization is critical. If what you own has some value, big or small, because it's tokenized, then you can trade it, you can do stuff. The second thing is financial access. Let's say I want to buy, the same mutual fund that my millionaire friend can buy, but the minimum entry price is $1,000, or maybe $10,000. Like when you go to a bank and you want to buy products, they have a minimum price. Okay, Why is it a minimum price? Because a settlement in TradFi is expensive. The whole transaction layer costs a lot of money, plus the bureaucracy around it means that unless they charge at least $500, or in some cases more, it depends on the product, you can't buy it. Now, $500 India. How many people can afford to buy a $500 investment? One shot.
True.
Okay, so
Makes sense.
when you do blockchain and you tokenize it, that product can be $10 or $20. So a lot of people only have hundreds of dollars in their savings. What can they buy today with hundreds of dollars in savings? The only thing they can really do is YOLO into stocks and Robinhood, okay, right? Or buy crypto, right? But if I could put some money into something that is yield bearing, that my millionaire friend can put in, but I can now do it in a fractional way, then I can also start compounding my wealth in a more stable manner too.
Correct.
I can do both, right? And that, again, is how we bring the world access to this. But I have to also know it. And if I don't know it, then I wouldn't even do it in the first place. Like, why would I buy this fund or this bond or why should I buy gold? Like, I don't know, right? I have no idea. Someone has to teach me. And so this is, to me, not just where AI comes in, but this is also where, when you tokenize it, how do our children learn about money? By trading Pokemon cards. It's not because school taught it to them, right? And so the result of that will be that because you have that knowledge, and because it's tokenized, everything that touches it will ultimately teach you about money. You know, a lot of people are critical about Web3 gaming. You know, lately it's been very fashionable to shit on it. But still, most of the activity happening on chain is actually games. And what people forget is that it's because of games that millions of people in places like the Philippines have onboarded into crypto and started to learn about money. And those are the people who then have started to buy some crazy stuff, but some good stuff too. And then they started to save in things like Bitcoin, maybe digital gold, and they become more financially included. 30 to 40 years ago, when the internet was early, we had this thing called digital literacy.
Right.
I had to print my emails from a boss.
Correct.
Because he wanted to read it, because he doesn't understand email, right? Today, that doesn't exist. We all are digital literate, which also means that we know how to access information. We, broadly speaking, have the same knowledge. I mean, sure, there's some things you know more, there's some distillation, but the access to the information is broadly the same. That was not true 40 years ago. If you could afford a newspaper, if you could, I mean, I had to go to the library to access, books with knowledge, right? And some people had expensive books like encyclopedias at home, right? I mean, knowledge was power and value. And that's basically now with financial literacy. And we think financial literacy will go the way of digital literacy with crypto. So they're very much tied together. And then if we solve it, and we literally bring billions of people into the financial world by making them financially literate, I think that is the true calling of Web3.
Perfect. So RWA, tokenization, metaverse, gaming, and stablecoins, and okay, all these narratives. Okay, so which one you feel that was way early than it should have been, or which one you see that is the future, or it is the current market?
So, what is early is hard to describe, because you could argue back in the earliest of days of the internet that things like vocal tech or Skype or so on were super early, but they had to lead the way for things like, basically WhatsApp and Messenger, things to come so people can see. I remember, during .com era, because I'm that old, there was everyone was talking about essentially who would buy groceries online. And Pets.com was always a big banner story of a disaster.
Yeah,
the disaster story. Like, who would ever buy pet supplies?
Right now it's
online?
AI.com.
Yeah, right. Yeah, well, AI.com is a different story altogether. But yes, it kind of has similar feeling in some ways, right? But the point is that the idea of buying your pet supplies online is correct. It's just, you could argue it was a little bit too early. But if we didn't have Pets.com then, we may not have Pets.com in the way that we see today, in the timing that we did, right? So we needed to have these things need to happen, right? So that we can basically open up these new pathways. Play to earn had its moments. It's not totally dead, but we had to have play to earn to understand the dynamics of what it meant for Web3 gaming. But what play to earn also did is it brought in millions of new people into crypto that never were in crypto before. And then they basically went into the rest of the space. And now people are innovating on new forms of gaming. And right now, it's not just about putting finance into games. When people talk about GameFi, I think the real insight is that it's about gamified finance. If you look at prediction markets like Polymarket, it's a game, right? I mean, it's just expressed differently, but it's still just a game, actually, right? And for older people, they might not look at finance as a game, but for Gen Alpha and below, it's very much a game. So all of these things had to happen in their various timing in order for the market to evolve.
Correct.
Right? I don't think we can say too early or too late. And even the stuff we're doing with AI are going to be experiments, and they'll have their moments, and they're going to rebalance this stuff out. But the escape velocity of where it's going is very, very clear from our perspective. So, I don't think of innovation. I don't think of sort of failures as mistakes per se. Failures in a very fast emerging and rapid sort of evolution of things, as we see like in blockchain and crypto, is essentially part of the learnings and the path of innovation. There's no path of innovation that doesn't come with mistakes. If you don't make mistakes, then you haven't innovated, right? And here you have a public infrastructure that is effectively financing these mistakes. But it's through these mistakes that we are now a $2.5 to $3 trillion industry, which we need to remind the audience here, 5, 6 years ago or 7 years ago, it was barely $300 billion.
Correct.
Right. So we've gone 10x in an industry that a lot of people were included in because we experimented, because we did all this type of stuff. But now, and this is where the next phase is going to come in, all this public infrastructure, even meme coins, where the POCs essentially for token infrastructure, they're essentially testing blockchains. Now we know that Solana and Ethereum and L2s can handle the volume. Do you remember CryptoKitties in 2017?
I remember.
I mean, we were involved in that.
Yes.
When CryptoKitties launched at $40 million of sale, Ethereum broke, right? There is no finance public infrastructure that could build on Ethereum in 2017 and 2018. Today, stablecoins, banks, infrastructure, all of those experiments that we say, too early, we didn't do them, Ethereum would still not scale to the point that it is today. It would still not be able to handle the load so that a bank will say, I'm going to launch a product on Ethereum, or I'm going to launch a product on Solana, right? So they were all necessary. Now we have this public infrastructure that allowed someone with not the same technical level as a bank to essentially open banking infrastructure and launch a prediction market. If blockchain didn't exist, Polymarket would not exist. Because the ability to build something that handles the money, the custody, the transaction layer would be too difficult for most people. I'm not saying it's not possible. I'm just saying the burden of getting there is much higher. And now we have hundreds or thousands of prediction markets. Again, I think if you want to ask me what's a bubble, I think there's a bubble of prediction markets, right? Too many companies are saying, I've got this prediction market, I've got that prediction market, right? It's the same as like Web3 gaming. I have this Web3 game, I have that Web3 game. It's an important category. There will be winners in the space, but it's not going to be everyone, right? But why is it possible? Because everyone can do it. Right? I don't need to be the best programmer or the best financial whiz, because the blockchain handles all the settlement for me, handles all the trust areas. And so, of course, this opens up, we think, the even bigger gateway, which is essentially the agentic web. Now we have a public infrastructure that agents can trade with each other, and agents can purchase with each other. This would not have been possible 5 years ago. If an agent was trading on Ethereum, good luck. It would just freeze and die, right? Now it can handle this transaction volume. So all of this stuff had to evolve and develop. So I don't think there's such a thing as a sort of too early. I think all these experiments were very critical, and we're just at the tip of the iceberg.
That's a good insight. So we're down to last final questions. So which sector do you personally believe the most undervalued right now? The gaming, RW, Dipin, or something else?
Education.
And
the reason why I say education is because education is something we all do. It's a $7 to $10 trillion market right now. It is underexposed in crypto. There's really only a very few projects like EDU, Open Campus, and Pencil Finance, and a few other projects that are doing stuff. However, the impact it could have is massive, right? And as an investor in the space, we like to look at things that nobody else is looking at, right? I mean, we are known for gaming and Metaverse, But when we entered the space in 2017, 2018, up until 2020, which took like, basically between 2017 to 2021, that was 3 years, right? Nobody was investing in it. Nobody looked at it because they didn't see it, they didn't understand it, they didn't appreciate it, and then it became a category, right? So those are the things that we like to look at. Of course, AI is important, and what we're doing at Animoca Minds is part of it. But AI is everywhere, right? So you can't say I'm an AI company unless you're building infrastructure, because everything's AI, right? It's like saying I'm an internet company. What's that, right? So to me, AI is pervasive. You have to have an AI solution in what you're building that is, AI powered or AI optimized or that kind of stuff. But in terms of categories, I think education, the fact that most people don't even say it, to us is attractive because it's still early, which is where we see the opportunity.
That's that's something different, because no one ever spoke about education as a different category for the space.
Yeah, just look at student loans. There are, from a finance category, there's over $3 trillion of student loans in the world. It's a perfect category to tokenize as an RWA, but it's education.
True. That's completely different insight. All right. So what advice would you like to give to the next founders or the founders who are building right now in the market waves, and they're struggling right now? Some are struggling, some are already built the product and they are into the market, but again disrupted via these speculations and other things. So what do you think? What advice would you give them?
I think the advice I would give to most founders is generally focus on the utility and use case of the product. There's a few things. One, when it comes to tokens, we were not allowed to talk about the utility because of the previous hostile regime. Now we can talk about the utility. So I think you really need to think about sort of that aspect. The second part is build a product people love. If people don't like the product, it doesn't matter if it's crypto, it's not going to save you, okay? It has to be a product people find useful and people like, right? And so this goes into any category. Whether this is a finance product, whether it's a prediction market, whether this is a game. If it's a product you can use and that you like, you will pay money for it, right? And then when you pay money for it, you have a business model where the entire flywheel starts to work. Whether it's a token, whether it's subscription, whatever, right? The problem is, right, that people are focusing on the token first, and that's okay if you're fundraising up to a certain point. But the problem is that if that's all you do, then you're actually not paying attention to the product itself. True. And then when you don't pay attention to the product, then nothing will happen, right? Then it's speculation and it has a moment of hype. Maybe there's some attention, but then it just dies. There's no value that's been delivered, right? So you need to have something that people use. And I think that's what the founder should focus on. Then the money will come.
Thank you so much. Thank you so much for the insights. And I think that's some valuable insights for our viewer as well. So until next episode, we'll reach you out with another founder and with another exciting news and information. So thank you so much, guys. Take care.